Something significant has occurred, and Coinbase adds to the intrigue. This is the largest amount recorded for the year. Billions seem absurd now that we're talking about trillions, but what the heck is happening and why did we have to wait a year for it? Allow me to clarify. Today, events took an unexpected turn when Analytics X discovered an astounding revelation in the cryptocurrency global on-chain data nerds. Keen Eye discovered that several hefty transactions worth an astounding 4 trillion Shiba Inu tokens were made with the primary U.S. exchange Coinbase as the destination. This enormous inflow of funds amounts to almost $100 million in real-world currency. Let's take a moment to process that figure. To put it into perspective, picture a mountain of cash the size of pebbles, dwarfing skyscrapers. That's how enormous this development is in the world of cryptocurrencies. To begin with, it's rare to see such enormous sums of money moving around, particularly in the Shiba Inu space. Ramifications for the market, possibly creating tidal waves of anticipation, conjecture, and possibly even a few restless nights for traders. But what precisely transpired was that a staggering 4.29 trillion Shiba, the largest US-based cryptocurrency trading platform, now offers Inu tokens for trade. What's even more intriguing about this is that the tokens were acquired over 2 separate periods, spaced 3 years apart. The first batch was acquired back in September 2021, and the second round was acquired in March of this year. Now for the interesting part, the tokens were distributed among just 10 wallets. When we fast forward to the present and assume that the astute owners were able to acquire these billions of coins at an average cost nearly twice as low as it is now, they could be faced with a. In the world of cryptocurrency, it's like hitting a home run, perhaps not a grand slam, but definitely a solid base hit, when you turn a modest investment into tens of millions of dollars. Remember that big Shiba Inu transaction we talked about on Monday? Well, it turned out that it was all just Robinhood moving its own stuff around, but let's take a moment to digest that. A cool profit of about $41 million. That is an entirely unrelated tale. If the $100 million Shiba Inu move caught your attention, get ready for something even bigger and a major shakeup in the cryptocurrency world. Coinbase just saw its largest Ethereum outflow of the entire year, and we're talking about over $1 billion. We're not sure why all that Shiba Inu ended up there, but let me tell you that the rumor mill is working overtime. People are coming up with all sorts of theories about who's behind it and what it means for the market. It's like a mystery novel unfolding in real time, and everyone is trying to solve the case. In this case, this significant change, according to CryptoQuant, has raised eyebrows and sparked a plethora of discussions regarding what it might mean for Ethereum and the market overall. As a result, while Shiba Inu is witnessing significant inflows to Coinbase, Ethereum is seeing significant outflows. It's akin to a seesaw in the cryptocurrency market, with one token rising while the other is falling, according to crypto analysts. According to Quant's most recent findings, on June 12, a staggering 336,000 Ether were removed from the trading platform, valued at approximately $1.17 billion. This isn't an isolated incident either. This is actually the 5th time this year that withdrawals from Coinbase have exceeded 150,000 Ether, and the size of these transactions has varied widely, ranging from $400 million to an astounding $1.1 billion. These figures clearly indicate that some heavy hitters are participating in the market, but it's also evident from the sheer volume and frequency of these withdrawals that they're not coming from your average Ethereum traders. Nope, these moves seem more like the work of whales or large institutional players operating covertly. Transactions of this size are typically much larger than those of your average retail trader and more indicative of heavy hitters with substantial stakes and well-developed market strategies. As for why they're making such massive moves, well, that's where things get a little murky at this point. However, if we look back in time and at how the market typically behaves, we might be able to find some clues. Some people believe that perhaps this Ethereum exodus is related to the big-time Bitcoin withdrawals that Coinbase witnessed earlier this year, before the introduction of Bitcoin spot ETFs. A sign that people are preparing for potentially Ethereum spot ETFs in the future, but hey, it's all just educated guesswork for now. If these withdrawals aren't just the exchange rearranging things internally, they could actually be a pretty good sign for Ethereum's future, because when you remove a significant amount of Ethereum from circulation, especially in such massive amounts, you're basically creating scarcity, and in the world of economics, scarcity tends to drive prices up. It's just basic supply and demand principles. That is especially true in the wild and wacky world of cryptocurrency, where emotions and market sentiment can swing things pretty wildly. Long-term indication: given that the amount of Ethereum in circulation is being reduced and that new investment opportunities such as Ethereum may be introduced, spot ETFs may be a recipe for some significant price increases in the future. But before we all get too excited about the Ethereum ETF debuting, there's an important thing to know. A leading industry executive is sounding a bit of a warning here, stating that we shouldn't anticipate the same massive inflow of capital on opening day as we did with Bitcoin ETFs. The relatively simple use case of Bitcoin as a store of value made it easier for investors to understand, but Ethereum is a bit more complicated. According to prominent figure in the financial industry Stephen Richardson, the value of Ethereum is tied to a number of tetchy things like smart contracts and decentralized apps, which can be difficult to put a price on. Until this is clearly established, there will likely not be the same rush of capital into Ethereum exchange-traded funds, ETFs, as there was for Bitcoin ones. However, there is still hope. Lessen your explosiveness. Many people think that the Ethereum ETF will ultimately change the landscape of the cryptocurrency market. If past performance is any indication, just consider how the Bitcoin ETF sent the price of Shiba Inu skyrocketing earlier this year. In case you missed it, Shiba Inu tripled in value back in March of this year. As a result, the Shiba Inu community in particular is giddy with anticipation. With the Ethereum ETF, lightning will strike again, and gazing beyond only the first day, there are several fascinating things to think about. K33 study is revealing some fairly eye-opening. AC's initial projection is that Ethereum ETFs might generate a staggering $4 billion in revenue in only the first 5 months. The Chicago Mercury Exchange is reporting that Ethereum's open interest is sitting at around 23% of Bitcoins, suggesting a similar level of market share in another large institutional market. If these estimates hold true, we could be looking at some serious cash. This crypto brokerage firm claims to be examining Ethereum's global assets under management market share, which they estimate at about 28% compared to Bitcoin. Flowing into Ethereum ETFs in the future, which has many people in the cryptocurrency world sitting up and taking notice. What are your thoughts on that? Please leave a comment below. I'd be interested in hearing what you have to say. If you're interested in learning more, click one of the videos you see on the screen. And with that, this brings this video to an end. In order to help me with the YouTube algorithm, if you liked the video, please like it and don't forget to leave a comment. You can also help spread the word about this story by sharing it with as many people as you can.